Good morning, everybody. So, let's start off with our standard press 1 on the chat if you can hear me. Let me check my OBS. Looks like the audio is coming through here. So hopefully y'all can hear me. Press 1 in the chat. Not seeing a 1 yet. Let's see. Can anybody hear me? Press 1 in the chat. Okay. I got a 1 from C Knight. Thank you. All right. So, this morning, let's talk about what's going on. So, we have a couple news pieces that are kind of shaping the market this morning. If we go over to investing.com, you have China possibly reopening. That was the big news, I think, from last night, if I remember right. Either that or the day before, it might have been. But basically, some Chinese officials came out kind of hinting towards letting up on the zero COVID policy. So that is going to kind of ease our supply chains because of, the crazy globalization that we've gone through and our reliance on China for our supply chains. And, now with them potentially, you can't really put 100% of your trust in China and what they say and what they do. Sometimes it's different. But if they do let up on the zero COVID policy, that will improve our supply chains, that will help to reduce inflation because prices are simply a function of supply and demand. Once we raise the supply, and if we have, the destruction of demand because of the higher interest rates, then that will be kind of a windfall towards lower inflation, which is exactly what the markets need. But that is contingent on, China actually following through with what they're saying. So it sounds like the bell just went off. I did open a GME trade that I'm probably going to close first thing this morning. But I do want to talk about the jobs report before we get started with trading. So if we look at the economic calendar, I'm going to post this in the chat for everybody. So I basically look at this every single day to see what's going on. So the initial jobless claims came in today. I was actually looking at the continuing jobless claims. Came in at 1671 versus 1600 expected. So there's more people that didn't have jobs based on the continuing, but the initial jobless claims came in at expectations at 230 versus 230 expected and 226 previously. So slightly higher than last month, but at expectations. So with it being higher than last month, that means more people are unemployed. And if you're looking at the continuing jobless claims, that's definitely the case. From 1600 to 1671, pretty decent uptick in unemployment. And we are starting to see some pain throughout the market. I don't know if y'all have been tuning in, but Carvana fell, I think, about 40%. I think it was yesterday. And the reason for that is because basically they're going bankrupt, and the two people that finance their debt are trying to figure out what they're going to do. So they came out and publicly said that they're trying to figure out what they're going to do on the contingency of Carvana going bankrupt, which is very likely. So Carvana sank another 40%, and now their stock is down by 99% from the top. So this, I made a tweet about this, saying that just because the stock has fallen 90% doesn't mean that it can't fall another 90%. Let's see. This tweet right here. Carvana, the perfect example of just because the stock is down 90% doesn't mean it can't fall another 90%. And second note on that, you need to learn how to read a statement of cash flows, because if you could read a statement of cash flows, you would have seen this from a mile away. I've been going very in detail on this statement of cash flows for basically any company that I'm even thinking about, investing in. And if a company is not free cash flow positive, or they don't have a positive operating cash flow, that's not a company that you probably want to be investing in whenever, everybody is just kind of getting slapped in the face right now because of the monetary policy tightening as quickly as it is, right? You want a company that has positive free cash flow, and you want a company that has a decent balance sheet. Like if you're investing in a company that only has say 3 quarters left of cash based on their operating cash flow, that's not a company that you probably want to be investing in, because the Fed isn't probably isn't going to pivot within the next 3 quarters. The Fed probably isn't going to pivot until 2024, and that's not even a bullish thing for the market. So there's an interesting thing that I posted in the Discord as well. So I'm giving a little bit of a more long-term kind of perspective instead of my usual day trades, but stick around and I will make some day trades. But I posted this in the main chat, and it was a nice little visual that shows every time the Fed pivoted. So when the Fed pivoted in 2019, they dropped the rates from looks like 2 to 0. SPY ended up falling 35%. In 2007, they dropped the rates from 6% down to looks like 0% in a matter of 2 years. SPY ended up falling 58%. In 2000, the Fed dropped rates from looks like about 6%, 7% down to maybe 2%. SPY ended up falling 51%. So basically, any time that the Fed pivots, the stock market usually ends up coming down. And the reason for this is because the Fed is reactionary by nature. They react. They're not proactive to something blowing up. They're not really forecasting some major catastrophic event like, say, the Lehman Brothers. More recently, like Archegos or FTX, right? They don't really predict these things happening in the future, but then once something catastrophic, along the severity of Lehman Brothers happens, then they have to pivot. They have to flood the economy with money supply. Otherwise, we end up completely screwed over. Our financial system gets ruined. So the Fed pivot isn't necessarily a bullish thing. And that is expected, I think, in 2024, I think that's the latest that I heard from one of the Fed members. I'm not sure which one it was, but they said that they don't expect to be cutting rates until 2024. But SPY is currently up this morning, currently at 394, up 0.2%. So with the jobless claims, I think that's more recessionary sort of narrative, which has been sending the markets down. But the initial jobless claims basically came in at expectations. So I think I would be probably bearish to neutral unless there's any other news that I'm missing out on besides the China news, but we can't really put 100% of our trust in that. So either we do a bearish neutral trade, so a call credit spread, or an iron condor with the China news. If there's any more developments on the China news, that would be bullish. But for right now, definitely seems like that first candle has been bearish. This is definitely a candle of significance, so what I like to do is take the open and close price of the candle, which was 395.14 plus 394, divide that by 2, and you get 394.57. So that's going to be a new resistance. We're going to move this one up to 394.57. We filled the gap. Another free cash. Yeah. Yeah, I think, let's see. Let's check out the daily chart. Well, we didn't really leave a gap. Besides, I guess, the close, but since we had that wick up top, that wouldn't really have been a gap. But let's see. We're trading at 394.24. I'm either bearish neutral or just neutral today. So let's try to see which one is going to pay us the best. On the 3 minute. Okay. Let's see though. I'm going to pull up the Robinhood. Seems like my UVixie shares are down this morning. What else do I got going on that's taken away from the portfolio? Yeah, I think UVixie is probably... No, UVixie's actually headed higher. That's kind of surprising that UVixie is headed so much higher when the markets haven't really been moving much, but I guess that's just the mechanical nature of the VIX. Whenever people are buying more puts, the VIX tends to go up, implied volatility ends up going up. So, yeah, I guess VIX doesn't really need the stock market to come down ahead of the Fed meeting next week. That's going to be the big volatile event on the 13th and the 14th. I'm already up 115. I've got like 4,000 locked up into these 500 shares. Bought 100 shares of UVixie. Exit plan is 12.12 no matter what. Yeah, I think that's a pretty decent idea just to exit before the... Wait a minute, what the hell is going on here? Oh, so I had the GME put debit spread. That one's at max profit, I'm guessing. Where I bought the 27, sold the 26. So we're going to close that first thing. Get out of this trade first. Let's see. Wait a minute. They're only going for 40 each. Oh, the stupid bid-ask spreads, dude. Okay. Let's check Aries, I guess. That's always the place that I go to for better bid asks. One day I'll switch to Aries. I just got to call up the trade station and remove my pattern day trade mark for whatever reason. I don't know how they mark me as a pattern day trader. But, yeah, GME. Options. Expiring the 9th. We had puts 27 and 26. I ended up selling the call option that I bought just because the likelihood of GME rallying a crap ton was super low. But this order is going for 90 cents at the bid, 110 at the ask. I don't see why they wouldn't give us 90 cents on Robinhood, but I tried that yesterday, and the bid ask was the same, 90 and 110, but I didn't get filled, so maybe there's just no volume on it. That's possible, just given how far it is from the strike prices. But yeah, let's try to close these 6 at 90. Hopefully, yep, sweet, that got filled. So we got $552 of credit, so a little bit more than I anticipated, which is always good. Always like getting paid more money and not less. But yeah, looks like SPY caught a bid on that 393.6 level. Roddick in the chat asked, how long did it take to receive the funds that I sent to Aries? It actually took quite a while. I think it was like 3 to 5 business days, if I remember right. Let me... 3 to 5 business days, if I remember right. It took a while for them to have my money available to trade. But let's post this closing options alert. We're out of that GME trade, thank God. Closing options alert. Something interesting that I will talk about after this trade. Everyone just took profits on the GME. Put debit spread at 552 over 6. We got paid 92 each, actually. So better than the bid. Very unusual for Robinhood, but I'll take it. Closing options alert. Strike prices were 26, 27. Whoops. Okay, and let me pull up the history. Jimmy put debit. Oh, wait a minute. $452. Originally opened these with a call for $452. So if we do the math here, I got paid $552 from this, and then I got paid $30 for selling the call option. So $552 plus 30 minus the $452, $130 of profit for this specific trade. I should say sold call for 30. So that's the trade there. Let's set up I think an iron condor for SPY is probably the best fit. Choosing the lower strike price is going to be the difficult part. I would say 392 would be pretty good. I would probably want to close if we go, let's see, let's make some price levels. Let's make some new price levels would be nice. No. I guess this expands to the 2-day 5-minute chart, so we don't need to make any more. I will get rid of a couple of them. I will get rid of this one and this one, the ones that extend past the 5-minute. Looks like we're headed lower again. But I think I would probably close if we head below 392.93. I think that would be a confirmation of bearish. 392.62 would definitely be a confirmation of bearish. So let's make a alert with that drawing. Since we're already headed down there, we might be able to get away with a put debit spread for cheap. Put to call ratio is 1.7. Yeah, that could also be a contrarian indicator too. But usually that kind of, like, if they're out of the money puts, then that usually kind of feeds into more selling of shares. Kind of like a reverse gamma squeeze, I guess. Because the market makers have to sell the puts, and in order to hedge selling the puts, they have to buy the shares. So it's basically a reverse gamma squeeze where they have to sell calls and then buy 100 shares. Or no, they have to sell 100 shares if they're selling puts. So reverse gamma squeeze. Now today should be flat. I don't know if today's going to be flat. We'll see. SPY. I'm thinking either flat or down. So call credit spread is the best fit, but I also kind of want to leverage a little bit of the money. So let's say we stay probably below 394.57. That would probably be bullish if we went back above the middle of that candle. We tried to do that before, didn't end up getting past it. So 394.57, create an alert at or above that level. And I probably want to go another 1 or 2 strike prices above that just to be safe. So we could do 395, 396. That's probably going to pay us a handsome credit now that we're trading at 394.36. See if there's any news that might be changing the markets. Nope, nothing major at least. These are paying $38 in credit to assume SPY will be below 395. I'll go higher. That is a lot of credit though. So 396, 397 pays you. Whoops. 26. So that's actually a decent credit for what it is. The open price was 395.12, so we could probably use that as a gauge. 395.14 actually. 395.14. And this is paying 25 credit, so looks like we got rejected again at that 394.57 mark. So we'll try to get these. I think this trade is probably worth 750 or so. So let me try to open 30 of them. At 25. Hopefully we get filled. Robinhood, please fill. Of course not. Oh, I did get filled. Wait a minute. Did I? Yes. Okay. Okay. So, let's see. So 30 of those. 25 each. 750 credit. Closing. Or, sorry, that's a new options alert. New options alert. Premium. Sorry, everyone. Day trade. Everyone. Just opened a new SPY. Call credit spread. Expiring today. 12/8 at 25 each. Strike prices were, let's see. I think 396, 397 if I remember right. Double check it. 396, 397. Yeah. Okay. All right. So really we gotta see what weighs more. Does China and their reopening weigh more, or does a kind of bad jobless claims weigh more? I actually possibly think that China reopening is good, but again, it's not really reliable, right? Like, you can't really rely on what China says and what they do. And it's always changing. Like, their policy is always switching back and forth, so it's very difficult. But just went above that 394.57 mark. Still holding this trade. Just want to post the details for it. Looks like we're headed up some more. All right. Jobs data came in rough today with more jobless claims than expected, feeding into recession theme. Markets have been worried about the last few weeks, but China possibly reopening could keep the markets neutral today. So we tagged that 395.14 mark that we opened at. Let's see. And our strike prices again were 396, 397. So that would be the top of the market right after the jobs data came out. That's actually interesting that we went up with the jobs data. And we hit that 396 mark right after it came out. So somehow the markets perceived it as bullish, even though it's feeding into the recessionary theme. I guess the reason why the markets might perceive it as bullish, because that basically confirms that we're going to get a 50 basis point rate hike for this month, next week. If you go over to the Fed watch tool, that is not the Fed watch tool. Hello? Can I please have the Fed Watch tool? I need the actual one. Yeah, looks like we're testing that. Open again. Yeah, so the odds of a 50 basis point rate hike, 74.7. Odds of 75 basis point is 25.3. So very low chance that we get the 75 basis point, which is kind of good for the market, but at the same time, like I said earlier, a Fed pivot is not necessarily bullish. Let's see. All right, we're headed to 395.50. So we cleared that 395.14 open. Might end up having to take the L for it. Let's see if we actually hold above the open or if we come right back down. Yeah, kind of seems like we're going to hold. Just given how high it is off that open. It's not a lot of volume. Well, I guess there is some volume coming in now. But let's see. Could always raise our strike prices to like 397, 398 would definitely be unlikely for today, unless we just get a trend day where we don't have much news and the markets are just going to go based on the trend of the market. That's happened twice over the last couple of weeks, on Tuesday and on Friday of last week. So that could end up in the markets going up to 398 if it is a slow news day. I think it's unlikely that we do, but it might not be a bad trade if it's cheap enough. So we would buy the 397, sell the 398. That's $23. That's actually pretty expensive, honestly, for what that is. I wouldn't be willing to pay more than probably about 15 for that spread. So yeah, that's not a worthwhile trade. VIX dropped, UUP slightly off, TNX is up. So let's check the fundamentals. 10-year Treasury yield up this morning, so that mechanically should bring the markets down. UUP, the dollar is headed down some more, kind of feeding into the recessionary theme. Let's see, with the dollar dropping, gold should be going up too, and we opened a put credit spread on gold yesterday, assuming that it's going to stay above 165. I guess with basically confirmation of a 50 basis point rate hike for next week, we could add to the gold 164, 163 put credit spread. That might be a decent trade idea. Let's see. We have 6 of them open right now at 24. The only caveat to this is the SEP, or the Summary of Economic Projections. If they do a 50 basis point rate hike, that's not necessarily bullish. And the dollar still could go up based on the other rates, like longer term rates. It would be shorter term rates that would go up if the SEP ends up going up. So, because the time frame on the Summary of Economic Projections is usually like 5 years. And then they do long-term projections, but I don't think that's going to have as much weight. But yeah, gold is definitely making its way up with the dollar falling. These are going for 20 each. I already got 6 at 24, which means that I'm risking about 75 for each one times 6, 450. Is that really my risk? Just $450? Let's see. I think I'd be willing to put up probably 600-700 for this. So that would be, let's see, Another 150. That'll be 2, 3. So probably only a couple of them. Opening these trades, not closing them, please. Make sure that I do that. Gonna have to open them at 19, it seems like. So 2 more put credit spreads for gold, assuming that it's gonna stay above 164 for GLD. And I will take a picture of the new position size. All right. New options alert. Or, sorry, that's just an options alert. Already had it open. Everyone just opened 2 more gold put credit spreads at 20 each. We actually got filled higher. Strike prices were 164, 163. Whoops. Okay. So let me take a picture of the, again, the new position size. Okay. Damn it. Discord just doesn't like posting my images sometimes. There we go. Yeah. All right, so SPY is at 396 now. So definitely above the open. I guess that 398 trade wasn't so bad. That's crazy. We're back to the top where we went right after the jobless claims came out. So decent chance that that reaction was the right reaction at this point, it seems like. And we're assuming SPY is going to be below 396. I mean, with this candle, it should be a decent chance that we pull back to probably the midpoint. Let's see, the open was at 395.24. 395.24. Close was at 396.18. 396.18. Divide that by 2. You get 395.71. So let's see if it pulls back to that. Probably attempt to try to close out of the call credit spreads. If it breaks below it, then we can hold. But if it catches a bounce on it, then probably best to close because we're probably going to head higher. Just based on the initial reaction to the jobless claims, based on the China news. I guess the initial jobless claim came in at expectations, and I guess if it's not bad news, then it's good news. It's a way that I would interpret that. But let's see if we pull back to that level first. I'm going to create an alert with that 395.71 price level at or below. All right. And if you are bearish today, this would be a very good time to open a put debit spread. Just considering we got that double top at around 396.55 or so. But my worry is that today is going to be a slow news day. Probably going to be trend based, and trend definitely seems up so far this morning. We started off on a good note on the open. SPY was up like 0.5%. So might be a pretty good day for the market. We already are up 0.8% though, so not really sure how much more room we have to go. I guess with the China news, you might see VIX rule of 16. So VIX is trading at 23 basically right now. 23 over 16, you get 1.4. We're already up 0.7, which was $3. So another $3 up. So we could see maybe $3.99 today. if the VIX rule of 16 happens. Let's see. So you would buy... You'd buy a 398 call. And these are getting pretty expensive too. These are 21 cents each. I wouldn't put a lot of money on it just because it is the rule of 16 and it should only happen every few days. We did have one day on 12/6, so it has been 2 days since then. But let's see. This might have been another day too. I'm not sure. This was definitely... So we had 1 out of 3, 1 out of 3, and this might be another 1 out of 3. Maybe. So let's see. They're going for 24 each. I wouldn't spend a lot of money on it. Probably only about 400. So I'd probably open around 20. Get him for... They're going for 24 at the ask. I kind of want to wait on the price to come down a little bit, if we can. Maybe if we catch a bid on that 395.71 mark, then I'll try to buy those. What was the close yesterday? The close was 396.31 is what we're currently trading at. It's up 3.16. 396.31 minus 3.15. So we closed at around 393.15. 393.15 times 1.015. Yeah, so that would land us right at that. Right at that 399 strike price. And these contracts are just getting more and more expensive. I don't know if I want to wait for it or if I just want to hop in now. They're going for 27. I really don't want to buy them for probably more than 30 a piece. And I'm going to reduce the amount that I'm buying the higher that I have to pay. Let's see. 27 each. Ideally, I want to get them for like 25 or 26 if I can, but I don't know if I'm going to be able to swing that. Yeah, it's already up to 30. Damn it, that sucks. All right. I don't know if I want to feed into the momentum. At some point, I would imagine it's got to pull back. That's 1, 2, 3, 4, 5, 6 green candles in a row. They are coming down to 27 now at the ask, so we might be able to get in. I'm surprised with the 10-year up this morning. I guess nobody really cares about the 10-year anymore. Now that I think about it, people have kind of strayed away from the 10-year. All right. Damn. That's another green candle. I don't really want to pay more than like 27 or 28 for these, so Gonna have to miss this opportunity probably if it keeps going up like this. Wild market. Should have figured that it would have been bullish on that 830 candle. Price action still holding the SMA 9. Yeah. I don't use too many indicators on my screen unless I need them. Sometimes like I'll use moving averages if I'm trying to find like the 30-day moving average of oil prices or something for like CPI and stuff. Chasing things over here. Yeah, trying not to chase this. But I do think there's a chance that we do see the rule of 16 hit today. I just don't think that there's a 30% chance that we hit it. I'd probably put it at like a 20-25% chance. So I'm only willing to pay 20-25 per contract, not 30. That's just too damn high for me. Is there a resistance number on SPY I'm thinking of today? It already blew past all my resistances. Besides 398. And 398 is coming from, let's see, this looks like this candle is significance back here. Well, this bottom and top, I guess. Alright, finally getting a little bit of a pullback here. Hopefully we come down below that high this morning. 395, 396.50. The bid dropped to 25, so we might be able to scoop them up now. Let me zoom in. All right. Come on now. Let me see the price. Okay. Yeah, so they're going at 28, 27 now. So I'll open 15 of them. Don't make me pay 28. I will, but don't want to. Kind of want to wait on a red candle just because 7 of them in a row have been green. One, two, three, four, five, six. Wait, no. 1, 2, 3, 4, 5, 6. 6 have been green in a row so far. Ugh. This market is just gonna tear me apart. I would think we would pull back to like 396.15-ish. That first huge, or that second huge candle. I would think. But let's see if patience pays or not. Not sure. Feel like today's green day. Yeah, I mean with the China news and the jobs report not being bad, it is kind of bullish. And then based on the rule of 16, this would be the day. This would be one of the days that we would see, you know, that VIX rule of 16 playing out and being up 1.5% at one point today. Can look into a put credit spread instead of a call. Yeah. You could also turn the call credit spread I had earlier into iron condor. I would wait for the market to pull back. Finally, we pulled back to 396.35. Hopefully, we pull back to 396.15 or so. That'll cheapen these contracts up a bit. Not being able to find any trades as an option seller. Stocks in my watch list are all low IVR. Any ideas? Rarely trade spreads, so stock recommendations below 50. It's just really hard to find many decent stocks under 50. I'm very much an events-based trader, so I basically like to trade either for earnings, like I did for GME today, or I like to trade events like economic news, like the jobs report that came out this morning. So that's just my style of trading. Everybody's gonna have like their own style and like what they're good at. I've always been half decent at like predicting events and seeing how the markets like react to that and being able to see what prices the markets would go to. But that's just kind of, the way that I've structured my trading over like the last 3 years is events-based trading. All right, so these are going to 27. Doesn't look like we're going to get a major red candle. So I'll put in the order for 28. It's probably going to come down immediately after I open this with my luck. But let's see. Let's test my luck today. Spent $420. Nice number there. All right, and I'll put a limit order to open. Limit order to open, SPY, 398, 399, call debit spreads expiring today, 12/8 at 28 each. Day trade alerts. All right. Hopefully we got filled. Nope, of course not. Why would Robinhood do that? Oh, man. What a day. I got filled on one. 1 of 15. 14 of 15. There we go. Sweet, now we're open. Business is open today. Why do I think we go to 398? So based on the rule of 16 with the VIX trading at 390, with the VIX trading at 23, you divide the VIX by 16, you get 100 or 1.43, so that means that SPY could move about 1.4% from yesterday's open or yesterday's close, which was like 393.15. You multiply that by 1.014 and you get a price level of like 398.65. I calculated as 399. I'm not sure what numbers that I had typed in, but basically with the rule of 16, there's a 1 in 3 chance that the stock market is going to move by the VIX number, 23 right now, divided by 16. So we've seen that twice in the last 6 days. We saw it this day. It went down 1.5%. This day obviously was more than 1.5%. So if you look at 1, 2, 3 days, and then you have 1, 2, 3 days, so this would be 1 out of the next 3 days, and likely going to be to the upside, just given the China news, given that the jobs report wasn't bad. Neutral news is kind of good news in this market. So yeah, I decided to put on that trade. I didn't spend a lot of money on it. That was only like 400. So, but I do think that there's a decent chance that this trade works out. I'd probably, let's see, with us trading at 396.50 right now, it is still pretty far from our strike price that we needed at. But if we do trade based on trends today, given that there's no news coming out, I do think that we're probably just going to keep headed higher. Yeah, no problem, Tony. And it's also a decent hedge against our bearish neutral trade that we have for SPY with the call credit spread, assuming SPY is going to be below 396. So hopefully one of these trades works out. Worst case scenario, SPY ends the day between 396, or sorry, 397 for max loss on the credit spread, and 398 for max loss on the debit spread. If the market makers really want to screw me over. All right. So we are pulling back a little bit more, so those put debit spreads are probably losing some money right now. Let's check it. Let's see what's losing. 398, 399. So they're going for 24. I bought them for 28 each. I only bought 15, so I didn't spend a lot. So we're only down to 75 so far. And then for the put credit spread or the call credit spreads that we opened, those are probably down pretty significantly if I had to guess. Yeah, 720. So pretty hefty loss there. That one I was more confident in based on my analysis from this morning. Hence why I sized it the way that I did. But let's see if we test this 395.71 mark. That's going to be kind of the line in the sand, if you will, for the market, I think, today, based on that last candle of significance. So you take the open and close price, divide that by 2. You get the average of the candle of significance. And that came in at 395.71. So if we go below that, I think that's going to start a downtrend or a neutral day for today. And if we stay above that, then that's going to be a bullish trend for today. Just based on price analysis. Yeah, SPY probably going down for the rest of the day. Could. After I open that call debit spread, that seems like the likely move. Let's see. Where the hell? Oh, man. We're trading at 396.15, so we're not far from the 395.71 mark. Hopefully we reach it and make a decision on which way we're going to go today. That would be nice if we could do that quickly, but markets don't really care about my time. Neutral is best, but tomorrow could be a tanker. What is tomorrow? What economic data do we got tomorrow? We do have the Fed meeting next week, so people might be selling ahead of that. That's what I would think of. But looking at the econ data for tomorrow, we got core PPI, so producer price index. So that's a inflation measure. I really love looking at the Michigan report, but it seems like nobody else does, considering the stars on this are 1 and 2. Like, it literally tells you what consumers think inflation is going to be within the next 5 years and the next 1 year, but they rate that as 1 star, which makes no sense to me. Like, that tells you if people think that inflation is entrenched or not, but for some reason this website doesn't see that as important data. I don't see why. But yeah, seems like we're gonna stay above that 395.71 mark now. Let's see, we're gonna have to head higher than 396.60, I guess, first to confirm or deny. Alright, maybe we can draw up another resistance level between 395.71 and 398. And that will be 395.71 plus 398, so the halfway point between those. You get 396.86. 396.86, which was coincidentally the top right here. Roughly. So that is the new mark to look for the upside. So if we break that, probably need to get out of the call credit spread at a loss. So I'll probably create an alert with that drawing at or above. And then we have the at or below 395.71. Hopefully we don't just trade in that range all day. That would be annoying as hell. Super annoying if that happened. Let's see. Kind of want to take a put credit spread. That would be 2 bullish trades, 1 bearish trade. And I would think we probably stay above 394 would be my guess. Right now we're trading at 396. We're about $2 away from it. So let's see what we can get paid for a 394 put credit spread for today. $14 a credit, $15 a credit. It's kind of cheap. But I would say the likelihood of us dropping back down after this uptrend is pretty low. So let's see. I would probably exit that if we go below 394.57. I'm gonna start taking notes on the alerts to create an alert with this drawing. Below, exit, put credit spread, PCS. Replace this alert. Exit CCS for call credit spread, and then this one probably want to. Where is the replace button? There we go. Exit call debit spread CDS. So we're probably gonna have to close out of that call credit spread. That's what it's looking like. We're about to head up to that 396.86 mark, which means that we don't get that put credit spread. Whoops. Yeah, today is just gonna be a trend day. That's what it's shaping up to be, it seems like. Is there any news that's coming out that might shape the markets one way or another? Nope. Still that Indo-Pacific news from 8:30 this morning. So, nothing major going on today. And there we go. We just hit that exit for the call credit spread. So we're going to have to take the loss. Pretty hefty loss, unfortunately. 61 each is what they're going for. 61. We had 30 spreads. We'll see if we confirm a breaker. Yeah, it looks like we're confirming. Yep. RIP to that trade. They're going for 65 though. That's kind of expensive. They should be going for 60 a piece since it's the expiration date and it's at that 60. The 397 strike price. The one that I bought. Let's see. 63. I hate negotiating with these people sometimes. Okay. Yep, take my money. Of course, the ass just dropped on me. Come on now. Robinhood loves being slow when I need to exit my trades. 63. Maybe we can get him out at 63. Maybe it actually pulls back below that 396.86. I don't know. I don't think so, though. I think we went significantly above it, so I think we hold. So 30, 63. Not enough shares. God dang it, Robinhood. Just let me close this stupid freaking spread, man. Okay, looks like I did end up closing at 63 each after my 100 attempts in order to close that trade. All right, so that one ended up with a loss, but at least we stuck with the exit plan. That's what needs to happen in order to be more consistent. So yesterday I ended up, or the day before, I ended up taking a huge loss because I didn't follow my exit plan. So closing option, whoops. Closing options alert. Everyone just cut losses on the 390. Whoops, this is the wrong trade chat. Dang it. Alright, I'm just gonna type it in. Closing options alert. Everyone just cut losses on the 396, 397 call credit spread at 63 each. Right now they're going for 62, so not much change. There we go. Let's see what we got those for. Originally opened at 25, so we didn't get much credit at all for them. Originally opened at 25 each, so 63 minus 25, you get 38 times the 30 spreads that I opened, 1140 loss. All right. Hope SPY calms down by the end of the day. It doesn't seem like it's gonna be very calm today. I think that it's just gonna, just based again on like the no news kind of day, it seems like it's just gonna be a trend day. You got bullishness from China reopening, and you got bullishness from the jobs report, supposedly, with it the immediate reaction being to the upside. So, based on that, no news. Seems like it would be another bullish day. But yeah, that's all the trading I'm doing today. I'll post all the closing alerts for the rest of the trades over on the Discord, and I will catch y'all tomorrow at the same time, 9:30 in the morning. All right, see you, everybody.